Good evening, everybody, and welcome to the March 11th, 2012 trade and market update. We finally got the pullback we were waiting for to the 20-day moving average in the NDX last week, and as expected, we had a pretty vigorous bounce off of that. As of right now, we've broken a trend line and come up, and we're hitting the backside of this trend line now. Now, where does the market go from here? Well, you have a couple of camps on this. One of them is that we've broken the uptrend, we've come to the backside of this trend line. It is the first sign of a reversal. If you take a look at the weekly bar, we do have a hanging man here, which is bearish, and that's probably about as far as the bearish argument can go. The trend is still solidly up, and I would expect a continuation of this up move higher. Just so that you know, we do have a hanging man on the weeklies on the NASDAQ, the SPX, and the Dow, and we do not on the Russell. However, the Russell has had its relative weakness in the past. Okay, so let's go back to the dailies. We have pretty much the same thing with everything. The 20-day moving average touch in the NASDAQ created a pullback in the Dow back to its more primary trend line down here. And again, we had that bounce. We come to the SPX. The pullback in the NASDAQ brought this back to the bottom of its support range here. And again, we had the bounce to the backside of the trend line. And as far as the Russell goes, we pulled back to the primary trend line and had a good little bounce here. So everything is, while we have some bearish signals on the charts, I always say that the primary trend stays in force until we're proven it's broken, and I wouldn't really even consider this market to be bearish unless we start to break under these. If we set a lower high here and start breaking under these, the 790 level, I might start to get concerned that we're breaking down. On the NASDAQ, again, we'd have to break down under this low. The SPX down under this low here at 1340. And in the Dow, we'd want to break down under about 12,734. Until then, it is, as far as I'm concerned, it is still bullish, bullish, bullish. Okay, let's move on to our positions. Realistically, the market has been doing absolutely nothing, and as of now, we have two positions on. That's all we have is the April bearish butterfly in the April M3 position. I'm thinking about starting to show, I have this other trade I do, it's called the M15 trade. If you've been doing the blog for a long time, I've been thinking of starting to follow that one as well. I just haven't done it in quite some time. I've been trading it, I just haven't been following it. So maybe we'll bring that one back in as well. However, for right now, let's take a look at our April 55-day trade. This trade has a profit target of $1,500, a max loss of $1,500. It usually scales into 3 butterflies, but we've only been able to get one on because the market really hasn't gone anywhere for us. Hopefully we're going to get an up move and be able to scale into this a little bit more. Or if not, we just kind of sit here and and we wait till we get close to our profit target and we'll just pull it off. As this sits here, we're just 1/3 positioned in. We're up about $360. Not a whole lot to say there. And as far as the method 3 trade, that looks something like this. This is up only $44. Earlier in the week when we were down in here, we were actually up to almost 1/3 of our profit target. But with the up move after the bounce, which is expected, we dropped down some money. But this obviously is going well. There's no issues here. And that's all we got. So I would expect either some sideways movement in the market holding above the lows of last week, and then possibly break higher. I will keep you updated with any changes in any of the trades. As for right now, we're going to need some market movement to do anything, but I'll keep you updated if anything happens. Thank you, and have a great week trading. Bye.